What's up, traders? Links in the description to the tools I use in my Telegram channel and group to ask questions and talk trading with me and other like-minded traders. So, first, we're going to make sure that our time is set to New York Eastern Standard Time. The reason why is because we fucking trade off that time frame, bro. That's why. That's why. All right. That's whenever the exchange is open. That's whenever all that opens. New York session time frame. That's what time we're trading. So that's what time we're gonna be, trading specifically at. That's when most of the volatility hits and all that. Anyways, we're gonna make sure we're on the 1 minute time frame. That's our entry time frame. Make sure you're on your entry time frame. Gonna scrunch up the chart right here so that way we don't know what the fuck's happening. We're gonna go back in time. We're gonna grab our replay tool, click it, boom. We're gonna go back a little bit more, grab our replay tool, click it, boom. We literally have no idea what's gonna happen in these times. Click it, boom. Alright, bro. We're gonna reset our chart. Let's see exactly where we are at. Let's go up to our higher time frame. And it is Sunday, 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 Sunday. We want to trade the 5 a.m. No, we want to trade the 9 a.m. candle, which is the candle that opens next. So this is a 5 a.m. candle. And what we like to start first is on our higher time frame. We start with internal to external range liquidity first, right? So higher time frame, mine is a 4 hour. Let's see what price is doing currently. So price recently reacted off of this fair value gap, internal range liquidity, and it is now headed towards external range liquidity. And what's that? It's going to be these relative equal lows down here, and you can see that it pretty much wicked them out, but we want to see it close, you know what I mean? So my bias is still bearish, especially if the 15-minute hasn't market structure shifted bullish. We're going to hold the same bearish bias, and we want to see this next candle, the 9 a.m. candle, open, go up, create the high, the wick, and that's what we're going to look to enter in on. Then go lower, maybe close below. So now that we have our higher time frame bias and what we're looking for, we're going to go to the 15-minute, and we want to see exactly that. So 15-minute right here, 9 a.m. opens on the next candle, which is right here. So 9 a.m. is open. Now we want to see it retrace into a point of interest, which is a PD array, either a fair value gap or like a turtle soup liquidity run, right? So we have some fair value gaps here. This is where we want to see price retrace into. Once it gets in here, then we'll look for like a 1 minute market structure shift. Okay, so let's see. Boom. Now we're going to drop to our 1 minute time frame, and we want to see the 1 minute time frame give us a market structure shift bearish. Okay, so we have this push up into our PDAs. Then it came down for a retracement into internal range liquidity. It created this turning point, but it didn't really turn the market and push it up. It kept going against us, so I wouldn't consider that the market structure shifting point, okay? So you can see price continued up, and there's a good reason why we didn't confirm that was the market structure shifting point. We would have got fucked. Anyways, right there's a turning point, market structure shifting point. Boom. Or never mind, it didn't close. Let's see, did that one close below it? Not really. I want to see it close. Boom. Okay, so with this candle closing here, this is what I consider a market structure shift bearish, okay? So we have the open from the 9 a.m. We have the open, high, and this is what we like to enter in on right here. We enter in on the wick to catch it lower, to create the low, and then close maybe below external range liquidity, okay? So right here, you see that we have the last down close candle or even the last up close candle from this up move that got closed below. You could consider this your breaker block right here, okay? If I'm not mistaken, it might even be the last down close candle, but I like the closest point of interest. See how the wick is lower than the wick of the black candle. That's I want to enter in early. So I'm going to set my sell limit right here. Boom. Short position here. My stop loss will go above this high. We're going to set it for 3.5 pips. I like to set a take profit for 1 and 2R, and I'm going to risk 2% here, okay? All right, we are tapped into the trade. And 1 to 2R was hit. All right, so we are up 2% on our account. So just to give you a little idea, if you had a 10K account, we would be up 200 bucks. If you had a 100K account, we would be up 2,000 bucks, okay? So plus 2%. All right. We caught that candle. That was very beautiful. And the 4-hour candle closes at 13, which is right over here. So let's go to the 15-minute, kind of see how that candle ends up closing. Oh, it comes all the way up, and it actually closes way up here. Well, hell, who cares? I mean, we still made some money, right? I mean, we looked for a setup. It's totally fine, and we caught our setup 1 and 2R. That's nice. But yeah, it closes up here, which is very interesting that I wanted to close up there. It's okay. We're still up 2% on the account. Now we're gonna go to the next 9 a.m. candle, but we're gonna go to the 5 a.m. to see. Boom. Okay, so 5 a.m. candle, what happened? It closed below external range liquidity. It's currently tapped into this fair value gap, PDA over here. Price could retrace off of this one, but we need to see a 15-minute market structure shift bearish, or I apologize, a 15-minute market structure shift bullish before we even start looking for buys. Right now, we're going to continue to look for sales. So we want to anticipate that this next candle is going to be open, high, low, and then close off, okay? So let's go to the 15-minute and let's look to see what 15-minute is going to do, all right? We want to see the next candle. That's going to be the 9 a.m. open. We want to see it go higher, either take out highs, go into the fair value gap. We'll see what it does. There's even a little fair value gap right here. If it taps into that one, we could go to the 1 minute and even look for a market structure shift as well. Okay, so what happened? Well, there were no fair value gaps. And this is a great lesson here. When there are no fair value gaps, you could drop to the 5 minute. Apologies. You could drop to the 5 minute. And sometimes there are fair value gaps on the 5 minute. Sometimes there's even liquidity on the 5 minute, like right here. Which kind of excites me now that I see it because it's relative equal highs. I'm feeling that price is going to come up and kind of take that out. We'll kind of see what happens. But let me plug in my computer really quick. I apologize. I don't like wasting y'all's time. I don't like wasting anybody's time, but I don't want this to die on us. It's plugged in. All right, let's get back to trading. It's plugged in. Cool. So let's see what it does. And it took it out. So that's a liquidity run. And it's okay. It's above our open. So this is a wick, okay? We're going to go to the 1 minute. And now we want to see on the 1 minute a market structure shift bearish, okay? This is a turning point. I like that. If price closes below it, that's decent for me. Boom. So with this candle closing below this turning point right here, why is it a turning point? Because it turned price somewhat to try to send price higher. It didn't close above, but this would be a mitigation block, okay? So right here, price taps into this area. I'm going to set my sell limit to enter me in if it taps into it. Stop loss is going to go above this high. We'll put it for about a 2 pip stop. Take profit is going to be that 1 to 2R, okay? Again, we are risking 1% here. We are in the trade now. Right here, price is just tapping into another fair value gap. Boom, boom, boom. Don't panic on a retracement. Right here is still tapping into the fair value gap, just turtle souped right here. That's beautiful. Oh, fuck. Hey, it happens. Hey, Hey, this shit happens, bro. So let's say where's our money at? It's over here. This happens, bro. So we risked 1%, right? So now we did minus 1% equals plus 1% is what we're up on the account, okay? So it's okay, these things happen, but right now it just created another high. It's still making that high wick that we like to see. Let's see if it market structure shifts bearish again. Market structure shifting point is gonna be down here for me, honestly. Or now that it just closed under it, let's kind of like identify it. After the market structure shift, because this was technically like a market structure shift to send price higher, this was the last turning point. So after reconsideration, I will consider this a market structure shift bearish, and this would be my market structure shifting point. So if price taps back into this leg here, which I'm considering this a breaker block. Why is this a breaker block? Because this high took out this high here. Then I'm going to sell it. Stop loss will be above the high right here. It's going to be a little steep, which is a 4.4 stop. Take profit will be a 1 to 2R. Here, we're going to cut our risk based off of our loss. Don't matter if we're up on the account. We are risking 0.5% here. So if we win a 1 to 2, we are up 1%, okay? Let's see what happens. All right, we are tapped into the trade. I'm going to put it to 1 times and let's play it out. Let's see what happens. It's kind of slow. It's very freaking slow, huh? I don't want to waste your time. I don't like wasting my time. Let's go to 3x. Before we continue, let's look at the 15-minute. Has a 15-minute market structure shifted bullish? It has. And you know what? This is scary. I'm going to actually close this trade where it's at, which is near break even. And the reason why is because, like I said earlier, it took out external range liquidity. We're not bullish until market structure has shifted bullish on the 15-minute. Right now, we should actually be flipping our bias to sell. Or not to sell, to buy. I apologize. Because as you see, we took out this high here. This is your breaker block on the 15-minute. Once price taps into it, we're looking for the 1-minute market structure shift bullish to fly. This is my apologies. This is why you got to keep the higher time frame always in mind, okay? Because as we see here, we got to look. Stay patient, right? 9 a.m. 9 a.m. candle was the one that market structure shifted it. So with the 13-hour candle, because I mean we'll have to consider 9 a.m. that we took an L and we closed break even on the other one. Because now it's pretty much lunch, right? This is exactly how I backtest, y'all. So yeah, so now I anticipate that it's going to go bullish, but we're not going to be able to trade it specifically because it's outside of the time that we're going to be trading. Okay, so we're going to go to the next 5 a.m. candle. Make sure it's right there. And it didn't even hold bullish. That's kind of crazy. Oh, look at this 5 a.m. candle went crazy right here. So this 5 a.m. candle, the way that it closed, it made a higher low, close above these highs here, and is targeting into internal range liquidity. My anticipation is that the next candle is going to be an open, low, high, close. So you guys keep it very simple, yo. Like I'm keeping it so simple trying to find my bias. Like bias is not hard at all, bro. It's literally easy. It's internal to external range liquidity, market structure shifts, and literally just how the candle closed. Did it close above? If it closed above the last candle, anticipate potentially higher prices. If it closed below the low of the candle, the last candle, anticipate potentially lower prices. If it wicked above, closed below, anticipate lower prices. If it wicked above, like right here, if it wicked above, closed within, anticipate lower prices or whatever, bro. You know what I mean? Like it's, and if it wicks above and closes below, you know what I mean? Like that's what I mean. Just kind of anticipate. It's okay if you're wrong, bro. That's why you got to manage your risk. You manage your risk, cut your risk after losses. Whenever you win, continue to hit wins. You know what I mean? Just build up your wins. If you lose after a win streak, cut your loss. So that way you don't eat into your profit if you hit a losing streak. So always do that, bro. Now we're gonna anticipate that the next 9 a.m. candle is going to open. So the open is here. We want to see it go low into maybe this fair value gap and then continue higher. Okay, let's see. Taps in 1 minute time frame. We're going to look for a market structure shift bullish, which we see that is coming up right here. Price hasn't done it quite yet. There it is, market structure shift bullish. I'd consider those. I honestly, the biggest wick in the area, I don't give a damn if it's the last candle, whatever works for you, bro. However you want to interpret mitigation blocks or breaker blocks, but I like to the biggest candle in the area. I want to get in on the best area, right? The first touch. The first touch. Okay, so with this one, I'm gonna risk 0.5% target a 1 to 2R. Let's see what happens, bro. All right, we're in the trade. What are you doing? Go back to take profit, bro. Thank you. Gosh, dang, that scared me, man. That scared me. I never go to break even. I let it run to either take profit or stop loss, bro. Either one. And as you see right here, it got a little scary, but overall it still hit a 1 to 2R. So this one, with 0.5% risk, 1 to 2R, we hit 1% plus 1%. We're up 2%. That's how I would backtest. Pretty much, I don't want to make this video too long, but that's exactly how I would backtest advanced ICT concepts. Thank you for watching. Please subscribe, like the video, message me directly on Telegram or through email for a one-on-one session. I will literally help you understand what I know exactly, and I will leave those in the description. Till next time, take care, stay safe, and let's run up those profits, y'all. Later.